Hey everyone, out of respect for your time, I'm going to reveal my top dividend stock to buy. Right in the beginning of the video is Visa. Visa is my top dividend stock to buy right now in July. But more importantly, throughout the video, I'm going to share with you my reasoning for why I think Visa is my top dividend stock to buy. For one, you're going to want to hear why Visa at a very small dividend yield is my top dividend stock to buy, right? That's an interesting choice. I'll explain that. Also, I'll discuss the latest court cases regarding Visa's competitive position. That's also important. And I'll also discuss the one primary thing that makes Visa my favorite dividend stock to buy. So without further ado, let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so Visa has been my favorite dividend stock to buy all year long. I've made this ranking around December 30th, and Visa has stayed on my list all year long, and every month I've updated this, and every month this year Visa has remained my top dividend stock to buy, and I've reported on the performance of Visa against the S&P 500 dividend ETF. So if you compare Visa right now, year to date, total return, this is dividends included, Visa is up 1.19% on the year, whereas the dividend ETF is up 3.02%. So my pick is trailing the dividend ETF. Now remember, all year long, I've been highlighting that the outperformance is not going to be so strong always, right? I reported in March, let's say, where I was significantly ahead of the dividend ETF, right? Visa was closer to 10% return, where the dividend ETF was closer to 1%. And I highlighted not to expect that kind of outperformance to continue. Similarly, I would not expect this kind of underperformance to continue. In fact, I'm expecting a reversal, a return of Visa to outperform the dividend ETF for the rest of the year. That's why I have Visa rated as a top dividend stock to buy. Now, I discussed Visa's skinny dividend yield. It's not a robust dividend yield. At just 0.76%, you can go with the S&P dividend ETF, the SDY, and you can get 2.65% dividend yield. So why do I have Visa as a top dividend stock with such a small dividend yield? Good question. And the answer to that is dividend growth. What I'm more concerned about instead of dividend yield is dividend growth. I want to invest in dividend stocks today that can increase the dividend per share over the next 5, 10, 20, and 30 years. And that's what I feel like I can get with Visa. And by the way, I do own Visa stock. I have owned Visa stock for some time now. Visa's dividend per share at $1.94 in the most recent trailing 12-month period is up almost 4x in the last decade. In 2015, the trailing dividend per share for the 12 months was roughly 50 cents. And you can see that growing by nearly 4x in 10 years. So now imagine if that were to continue over the next 10 years, you would now, instead of getting a $2 per share dividend that you're getting today, 10 years from now, that could be $8 per share. And if it were to 4x again, 20 years from now, that could be $32 per share in dividends. So you can understand my reasoning why I'm choosing Visa as a top dividend stock, because of the dividend growth potential, not because of the dividend yield, which admittedly is small, skinny compared to what's available elsewhere. So this is my primary dividend feature for Visa. Now, Visa is trading at a relatively inexpensive valuation. Its forward PE of 23.5 is almost as cheap as it's been all year long. It started the year at around this same valuation before increasing closer to 26, and the recent pullback in the share price has made Visa stock more attractive. The valuation is one reason why I've liked the stock, and it's now closer to being relatively undervalued, whereas last month when I made this video, Visa stock was fairly valued. So you're getting a better value for Visa stock this month versus last month because of the pullback in the share price and the pullback that I discussed earlier in the video. Now remember why I said the number one reason why I like Visa stock? And here is that number one reason. It's because of the incredibly lucrative and profitable business model. In the last 12 months, Visa has generated $34 billion in revenue, and from that $34 billion in revenue, it's generated $22.9 billion in operating profit. So over 60%, over 65% operating profit margin. That's one of the most profitable businesses in the world, one of the highest profit margins in the world. That's the primary reason why I really like Visa stock. And it's not just the number, the profit margin. It's why the company is able to achieve that number. It's the foundation, the underlying characteristics of the business that leads to this kind of profit margin. For one, it's the competitive position. Now, I highlighted the court cases earlier. Let's go to that right now. So one of the reasons why Visa stock has underperformed in the last month is because a federal judge recently rejected an antitrust settlement between Visa and MasterCard and merchants over interchange or swipe fees. The settlement was largely considered a win for the two credit card processors at the time of the agreement, but then the federal judge rejected that settlement, saying it didn't do enough to address concerns from merchants. So that caused the price to come down. But you've got to look deeper here. This news, understandably not good for Visa or MasterCard, right? The federal judge rejecting this. But this is evidence, again, of how strong Visa and MasterCard are in the market. The dominant position they retain in the market is so strong that businesses are taking the companies to court to complain and say, these two are too dominant. Like, we can't avoid paying them. We have to pay Visa and MasterCard. We have to accept their cards because so many people have a Visa and MasterCard that if we were to not accept it at our stores, then we would be missing out on so much revenue. But at the same time, these merchants, businesses are complaining that they have to pay Visa and MasterCard. And they're also complaining that Visa and MasterCard don't compete with each other. They want Visa and MasterCard to compete more aggressively and lower prices, but they don't do that. Visa and MasterCard pretty much say, here's our fee, we're going to leave it here, we're not going to race to the bottom here in terms of the fees. And that's good news for investors. When you have two companies the size of Visa and MasterCard dominating a market, in other words, this is called an oligopoly. I teach this in my econ classes at university. I like industries that have oligopolies like Visa and MasterCard, Pepsi and Coca-Cola, etc., that do not compete aggressively against each other on price. That's good for investors because that leaves profit margins elevated. Now, these court settlements, all of which may go one way or another, but the underlying factor here is that Visa, MasterCard, and others in the industry don't compete aggressively against each other, and that's led to great profitability industry-wide. I also own MasterCard because I like this industry so much. I own Visa and MasterCard stock. I like Visa better than I like MasterCard. So I highlighted that businesses basically are forced, well, I shouldn't say forced, but they have a strong incentive to accept Visa at their locations because in 2024, as of the first quarter of fiscal year 2024, there was a total of 4.4 billion Visa cards outstanding. 4.4 billion Visa cards outstanding. And that was up 6% year over year. So the company is finding ways to grow the number of cards in people's wallets despite the fact that it's already surpassing 4 billion. So if you're a business and you don't accept the Visa, you're missing out on this massive customer base. So most businesses, given the choice, they accept Visa. They pay the fees, even though they don't have negotiating power. They can't go to Visa and say, well, if you give us a lower fee, then we'll accept your card. They don't. They just have to accept the terms Visa gives, because Visa is the one with the negotiating power. And that's the position you want if you're investing in a company. You want the company to retain that negotiating power. So for all those reasons, Visa is my top dividend stock to buy right now in July. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.